Jen Naley with the Unity Group of Legacy Mutual Mortgage, and let's talk about June and what the market did in terms of mortgage interest rates. So if you watched mortgage rates in June, you probably felt like you were riding a roller coaster. We had geopolitical headlines, inflation reports, a Federal Reserve meeting, and rates moved pretty much daily. So here's what actually happened and what to expect going forward. So in June, rates remained very volatile. They spent most of their time in the mid 6% range, reacting to economic reports and world events rather than moving in one direction. One day they would improve, then the next day they would get worse, and it was kind of all over the place. As you can see on the chart behind me, that is a very volatile mortgage rate market. The Fed did hold rates steady. They did not cut rates in June. They continue taking like a wait and see approach while they're monitoring inflation and employment data. Inflation did improve later in the month though. Towards the end of June, inflation data came in better than expected. That did help the bond market a bit and allowed mortgage rates to improve from where they had started earlier in the month of June. And many buyers are asking, well, if inflation improved, why didn't mortgage rates go much lower, right? So the biggest thing to keep in mind is rates follow a lot of different factors. They don't follow the Fed directly. They follow the bond market, especially the 10-year Treasury and mortgage-backed securities. Investors are still watching inflation, jobs data, government spending, and overseas conflicts, so uncertainty has kept rates elevated. Looking ahead, here's what I'm keeping my eye on. Inflation continues to trend in the right direction. The labor market is beginning to soften slightly, and if both trends continue, there's a reasonable path toward lower mortgage rates later this year, but it's unlikely to be a straight line, and there's likely to continue to be volatility this year. What does this mean for buyers? Well, instead of waiting for rates to hit some magic number, focus on finding the right house, try to get a good deal, buy when you're financially ready, and remember you can refinance later when rates improve. You can't go back and buy today's home at yesterday's price. So I'd focus on finding that right home, try to get a good deal, and then refinance when rates go down. They call it marry the house, date the rate. So I hope that was helpful and look forward to the next one.